So welcome everyone to Boston Blockchain Association's June 25th event. We are live here with Nate, Sarah, and Matt, and we're going to be talking about the acceleration of blockchain startups and sandboxes. So I'm really excited to be the moderator with these three guests, and we have all met before, so it's great to see the three of you. Let me just quickly, before you do your intros, speak briefly about the Blockchain Association. So in 2019, we did about 10 events. We ended up with, I think, roughly 1,500 members, 10 corporates, our 1,500 meetup in the meetup. And we had some really great events. And essentially the founding pillar of the Boston Blockchain Association is really gathering a community of innovators, collaborators, entrepreneurs, and really focus on the promise of blockchain technology. So when I think of that, I think of digital currency, distributed ledger technology, blockchain, smart contracts, so broadly speaking. And our mission is to support, educate, promote, and advance blockchain technology. And we want to establish Greater Boston as an international hub for blockchain. And what's been interesting about the past few months is what we noticed last year meeting up physically is many of the familiar faces were all local. And what we've been seeing is our reach has been truly international, and that's been really exciting and a surprising transition sooner than we had expected. So we're really excited about what we're doing, and we'd like you to be as well, because to keep supporting the entrepreneurs and to build out the ecosystem and support what others have already done in other domains of technology and the startup world. We really think this blockchain association can make a huge contribution. So, members are what makes it work. Successful meetups as well. So if you go to bostonblockchainassociation.com, you can sign up as an individual, corporate member, students as well. We did a student event last year, and the great thing is thanks to the team at the Blockchain Association, we have the ability for you to do it in crypto. So I think they say we're talking the talk, walking the walk, whatever the expression is. So look, let's get on with our panel tonight. And I think, why don't we start with just a quick round of intros? Sarah, do you want to go ahead, and then Nate and Matt?
Yeah, thanks, Eric, and thank you for having me. Excited to be here. I had a chance to tune in for the last session and really got hooked. So I'm a member of the Boston Blockchain Association after that. So thank you. So with that aside, I'm Sarah Biller. I have kind of a varied role in the FinTech, mostly in the FinTech community, and by that broad category, I'm an entrepreneur, I'm an investor, and I'm also an academic. And so I approach kind of the thinking here through that lens of those three experiences, but largely through my role in co-founding the FinTech Sandbox in Boston and the use of these tools to advance innovation in financial services. So looking forward to the discussion with you guys.
Great. Well, thank you. And Eric, thanks for hosting tonight. Good evening, all. My name is Nate Rand. My background, I spent many years at State Street Bank and Trust right in downtown Boston. A lot of different roles kind of in the capital markets division, but found myself getting bit by the blockchain or Bitcoin bug kind of later in my career. I was fortunate enough to be able to work with some very kind of notable engineers who are advancing DLT technology at the bank. And I helped them think through the application of it in a financial services setting to add tremendous value. Recently, I rejoined those group of engineers at a startup company by the name of Manetu. And we are absolutely adopting blockchain components into the core architecture of our platform, focusing on delivering data privacy solution into the marketplace in recognition of things like GDPR and the California Consumer Protection Act, which are there to protect individual data and identities.
That's great. And thanks for having me, Eric. My name's Matt Walsh. I'm the co-founder of Castle Island Ventures. We're an early stage venture fund that invests primarily in blockchain infrastructure companies. We're based in Cambridge, Massachusetts. We've made 17 investments over the past 2.5 years, actually including into Manetu. So really happy to talk about Manetu as well today. Prior to this, I was at Fidelity Investments, where in 2014, I started working on blockchain R&D initiatives that were going on at the firm, and then eventually started a predecessor fund to Castle Island under Fidelity's umbrella. So really excited about the conversation.
Yeah, well, listen, thank you for those intros. And then I have, like the three of you, been part of a global international financial institution. So just for the folks that are joining us tonight, I think what I have found really interesting in talking with you before we got together is there's a dual perspective coming from the three of you, which is, hey, we know what it's like, in a financial institution, and we know what it's like to either invest, be part of board governance, or partnering with founders to help them be successful, and we know what it's like to be within a startup. So those should be some really interesting perspectives. And I think if we kick off, I mean, we really wanted to get to three topics, and with a little bit of luck, we'll get through two of them, maybe the third. But we want to focus on, what might a blockchain sandbox look like in Boston? What needs does it need to meet? And another topic is, the mirror image of that is really, what is it the startups and the founders are lacking? And I think it's fair to say this is probably not unique to a blockchain startup. It's more about the startups, but there must be some unique characteristics around the startup and emerging companies that are using blockchain technology as a component, or are fully invested in blockchain technology all the way. So why don't we start by talking about the challenges that some of these companies face, either from a blockchain perspective, or more broadly, just the specific ones that you've encountered before from some of your work. And Matt, maybe you want to jump in and we kick off the conversation.
Sure, I can get us started. So the two things that I think about probably the most from a challenges perspective for an early stage company in this industry, one is just regulatory. And so historically, it's been really difficult to navigate the regulatory waters. Part of that is driven by the fact that many of these companies that are building infrastructure for crypto assets are having to navigate state by state regulatory regimes. So if you are Coinbase or Circle, for instance, you needed to go state by state in order to get money transmission licenses in order to operate your business. So we don't have a broader overarching FinTech charter or anything that can be applied for at a national level. So that's historically a challenge. And then you have questions around, do you need to register with the SEC? Are there CFTC implications? It's just a difficult maze to navigate. So that's one. The other that I think is worth thinking about is just the protocols themselves. And you have early stage companies that are building on top of early stage protocols. And so I guess to use an internet analogy, imagine being in an age where TCP/IP is competing with OSI, and we're really not sure who's going to win, but you have to build a startup. I guess you don't have to, but your life's ambition is to build a startup, and you have this great idea. But what is the plumbing that you're putting that idea on top of? And do you have a good understanding of the roadmap of the protocols? We've seen where this can go bad, right? So in 2012 and 13, there were a lot of Bitcoin startups that thought that Bitcoin could be infinitely scalable at the protocol layer and compete with Visa and MasterCard. And that was a really bad, understanding of what was happening at the protocol layer. So I think just understanding what's happening with these protocols, which new protocols are developing, what can they do, what can they not do, is also something that early stage startups are spending a lot of time thinking about and could use help.
Is there just the protocol point is really interesting. Is there a, going through, the implementation of the internet and its adoption, was there, and I was around for that, I experienced it, but I really wasn't looking at it from a technology angle. Was there a point in time where suddenly, protocol moved out of the way, and is that something we should be looking for with blockchain, or is it always going to be, a challenge, multiple protocols, do you think?
Well, I think we'll always have a lot of protocols in the sense that, we have a lot of internet protocols. However, there's a tremendous network effect around dominant protocols for specific use cases. So there's only one SMTP, there's only one HTTP, and there's a coalescence around those being good protocols to build specific things like email and websites on top of. So if you want to use that analogy, I think we're pre-browser moment for blockchains. We really haven't had that moment where people are coalescing around a common standard. I think we're getting there, but clearly not there yet.
Yeah, so actually just picking up on that point, I mean, Sarah, you mentioned, you've been involved with, FinTech, Sandbox, and with startups, and can you see some parallels in terms of, the typical challenge the startups are facing versus some of these really undefined, or maybe it's a maturity curve that we're seeing with blockchain?
Yeah, I think, Eric, I would pick up on what Matt said. It's really a profound moment for the adoption of blockchain, right? We are seeing the impact of an aging infrastructure in the institutional industry, and it goes across every section of FinTech. What is challenging, as Matt so correctly articulated, is the multiple protocols, but it's also challenging the lack of understanding in the institutional adoption space. Because I think about where is our most important moment in blockchain, and it's to replace our aging rails in financial services. It's so we don't make mistakes in the distribution of tremendous amounts of capital. It's so we understand and can identify people safely, as Nate might talk about with his work. And that, to me, is where I do see a lot of parallels over time and histories. And I mean, we're no different, right? Financial services was mentioned in the Old Testament. It's a 2,000-year-old industry. It has sought to adopt the current technologies of the day. It just sometimes takes a little longer until you're in a catalytic moment like we might be right now that drives faster adoption of digital techniques. And so I have a lot of optimism that the FinTech community, the startup community, will rise to the occasion, and our institutions will find a way through. Each of us share an institutional background. I was at State Street and at Fidelity. So just kind of closing that loop. But Nate probably has some things there as well, Eric, on the question you just asked me.
Yeah, so Nate, please.
Happy to jump in. And Sarah, thanks for being the bridge between Fidelity and State Street. So I think building off some concepts that both you talked about, not only are financial service organizations, large established organizations, dealing with years of kind of legacy technology, but there's also this tremendous requirement and shadow from the regulators that they do things correctly, successfully, and legally and resiliently. And so to drop a new technology into a very established environment is a bit of a leap for an established player, which is why I think advancing blockchain technology within a startup is the right place to do it. To Matt's point, there's some things on the blockchain front that are still being figured out, and there's no better place to experiment with it than in a startup company and prove its success, once you've actually used the technology to do something valuable. And then, back to the sandbox concept, to me, the most beautiful kind of ecosystem we could create is as these startups build solutions from kind of a blank canvas using such technology, build it around the feedback from these established institutions, build it in a manner so that it can be deployed in these established institutions. And it isn't so much of an experiment. It's been proven, and now it can be fit into that kind of technology stack that's quite complex.
So is it really about enterprise technology and components versus if you refer to Rails, someone could perceive that as a major one-off transition, like the internet hitting us like a tidal wave. But on the other hand, I often think of blockchain, and it's a bias, as being a set of components when an enterprise looks at its technology or suite of tools, whatever you want to call it, and they start looking at components they need to shift out. And that could be part of the adoption, but I don't know if I'm right. I mean, is that part of it? It's a component rather than an entire solution.
I see blockchain as a series of components or technical solutions that when you talk about them in a blockchain, you're kind of representing all of them. But I think each one kind of inherently has its own unique values. And one that I've come to value tremendously as being part of this startup in and around identity and protecting data is the whole idea around encryption and using cryptographic capabilities and keys to actually access data. We're in an environment now where data streams through multiple applications and data stores, could be hundreds or thousands within an enterprise. And more so than ever before, these enterprises are relying on third-party vendors and outsourced providers. Clients are expecting real-time data. And my point is, data is just streaming through the system. So there's this need to, one, enhance how it's shared, driving toward that single source of truth, but two, protecting it. And through encryption and cryptography, which is a core component of blockchain, I see that as a tremendous capability and value that you could pull out of the blockchain solution, but it's inherently part of a blockchain.
Yeah. Any other thoughts? Yeah.
Eric, if I could take it one step further, because you did ask a really interesting question about the modularity of blockchain versus an entire continuum. And I would say that financial services is not easily disentangled, right? When Nate's talking about digital identity, I'm thinking about the use of the blockchain to settle trades. Why wouldn't you intersect those two capabilities so you have almost instantaneous AML KYC conducted, you have compliance and regulatory, and you're framing out the trade in a smart contract component. So you have, systematic arbitration of a contract that allows you to, execute a trade. So though I appreciate the modularity concept, I also think about the idea that we must understand that there's all these manual functions that make financial services work that may be able to be satisfied by a complete look and using blockchain as a core foundation solution.
Yeah, I think, well, when I hear this, it's very encouraging, because when I think of the experience in enterprise technology and financial services over quite a few years in a complex environment like Europe, I keep thinking about the value in terms of, bottom line improvement. And then I think of the challenges of, helping the startups actually get the engagement so that some of those things you've described, whether it starts in one place or it starts in another, actually the traction is there so that there are some really visible and tangible successes. And so maybe from an investor perspective, Matt, when you look at investing and you look at the challenges that the startups face and wanting to engage with institutions and partners, what thoughts do you have? Is there an area or an approach that's more promising than another? Is it about currency trading? Is it about settlements? Is it about client confidentiality? Or
yeah, so I think it's a fascinating industry, and there are reasons to be excited about this industry all over the map. And it's actually quite tribal when you dig into it. You find that there are pockets of the industry that really don't like other sides and are maybe antithetical to certain ideas. But kind of broadly speaking, the way that I think about what's going on now is that we have three tribes, three dominant ideologies in this industry. One, I call it the money tribe. It's basically this idea that, Bitcoin gave us the ability to have non-sovereign money, money that we control, for the first time. And that idea has been built upon. We now have stable coins. These are fiat currencies that are moving on blockchain networks. These are growing like crazy, right in our backyard with Circle, among others. So this is a big dominant tribe. The second tribe that we're seeing, I call it the technology tribe, but it's this idea of what if in addition to money, you could hold self-sovereign your personal data. And what if we could participate in networks in the form of just controlling our own data as a part of that? So you've seen a tremendous amount of venture investing into tokenized networks that are trying to disentangle Web 2.0 data monopolies, for instance. And that's a big and powerful idea. And the third tribe, I call it the tokenization tribe, but it's the idea of taking real world assets and transacting those on blockchain rails. And this is, if you look at about the total addressable markets of some of these things that people are attempting, it's enormous. So we're talking about really big markets. Now, what I think is the most interesting thing, regardless of which tribe you're in, and maybe you're in multiple, is that we can all agree that there's a common level of infrastructure that is required for any of these things to work, and especially required for any institution to actually participate on any of these networks. And so at the most fundamental level, I think that's three components of financial market infrastructure. One is key management. So how do you hold these assets? How do you safeguard them? How do you make sure that they're not hacked? How are they safe to interact with? Two is just the trading and the exchanges of these things. How do you move them around? How do you get in and out of them? How do you put fiat currency into the system? And then the third is just data. So what's happening on these networks? How many people are using them? What are they using them for? How do we get price discovery to occur? So to me, the biggest challenge in the institutional context is just how can we get some of these infrastructure components at the bottom of that stack working so that the end use cases are actually functional. So a long-winded way of saying, I think that we're really in this infrastructure phase where we really need to build some of these on-ramps and the ability to safeguard the assets, move them, and engage with them.
So the rails and the on-ramp, there's another term I've heard, which is the off-ramp. Could we just go around and get your views on any one of those? And like the rails is an interesting concept because, you could keep it really simple and you could just think, well, okay, we can do some currency stuff. On the other hand, you could go very far and say that the entire underlying infrastructure of how settlements and things are done, is changing or will change. So it'd be really interesting to hear your views on what that means to you and then what the timing might look like. I mean, it is crystal balling a bit, but everyone has a view. I don't know who wants to start.
I'm happy to jump in first. I mean, the way that I have lately been thinking about it is that if you think about the internet analogy, and I said we're pre-browser moment, we're in the moment where the ISPs start to make a lot of money, I think. And those ISPs, if you want to use an analogy in terms of onboarding into a new protocol, these are the brokerages, the exchanges, and the custodians. And so companies like Coinbase, these are really the critical infrastructure components. And so it's no surprise that you're seeing forward-thinking companies like Fidelity start to build custodial and trading infrastructure to support these blockchain-based assets. This is really the huge opportunity right now. And so I think that's where we're spending a lot of time understanding what these businesses are going to look like.
I'll just add from an on-ramp perspective, I think Sarah was touching on this a little bit earlier, understanding who's on either side of the trade, understanding who you're dealing with, being able to write policies or smart contracts around permitted use given who the actor is. I see an on-ramp grounded around that identity. And if you can help organizations understand who they're dealing with on either side of a trade and potentially using a solution that has blockchain at its core or blockchain components, that becomes a step function. That becomes a one step toward a blockchain network that then allows you to plug into this further infrastructure as it matures or as it gets deployed.
Yeah, I'll just round this out because I love both the on-ramp, off-ramp, rail kind of intersection with infrastructure. I'm just going to be the dreamer on the panel and for a minute believe that we will also get to a place where we're beginning to fractionalize asset classes and that we begin in many ways to also monetize right now what are illiquid asset classes that might enable us to create, just as a dream moment, financial mobility and raise people up because they have access to assets that they've not ever had assets before. So I see that everything we're talking to, a confluence of also additional opportunity to remove the friction in accessing capital, and then also everyday individuals' access to historically institutional assets. And then the last thing is what Matt and Nate, you're both talking about, which is that there's a monetization strategy in us and owning our data and what that means to the future. And I can't help but think that that itself holds so much promise in what we're doing. So Eric, I'll rabbit hole us for a minute, but I won't take us offline because there's substantive conversations to have. But that's probably a fourth area here, not necessarily as far out as we think, given that we're seeing incumbents, the intersection of experienced executives out of incumbents and incumbents intersecting on the innovation. That is a tremendously important lift that we've not seen in this cycle of innovation before the institutions were arm's length.
Yeah, I keep as I listen to you, I keep thinking about, when does the traction really kick off and the acceleration happen? I mean, we see it in pockets, but when does it come together and then everybody buys into this underlying sort of transformation, which with the internet nobody really noticed. It was a little bit like Pac-Man, if anybody can remember what Pac-Man's like. It happened. We look back and we go, wow, things have changed so much. And here, when people do compare, the suite of blockchain technology to the internet, we now have the foresight because many of us went through that. So we look at it very differently. Mm-hmm. But chances are it will follow the same trend, but maybe in a more sliced and diced way. At least that's a feeling that I have. But there's quite a few things you've said which may be a good lead in to if that's the potential, and those are some of the areas we see where we could see the development and where there is enormous opportunity. What is it we need to do in Boston? So you've got an ecosystem, you have a startup community, you've got an emerging technology. We want Boston to be a leader, and we really want it to have an impact on economic development. We have discussions in relation to that, indirectly with the state, and that really means that everyone's looking at it. And I remember when Damon Cox was on a panel, and I hope he won't mind me quoting him. He talked about blockchain as the sleeping giant. Help us learn, help us understand. So what is it we need to do, to make that happen? Is it an institution that dives in and really gives the whole thing credibility, or is it a group of institutions that work with the BBA and this isn't a pitch, but just to throw ideas out there, that build a sandbox? What do we need to do? And it's very relevant because in the objectives for the BBA, we've said, let's have some great meetups, let's get some great people together, let's share experience. But what are we going to do next so that it really has an impact and makes a big difference in Massachusetts, with Boston leading because of the concentration of folks that are here?
So I'm happy to go first. I don't presume to have that's a really good question. I wish I knew the answer, but maybe as a way to answer that, I think that Boston has some of the critical ingredients to really make this ecosystem thrive. And 3 places in particular. One would be just deep academic horsepower. And so these are protocols that are moving really quickly. We need more eyes on them in terms of security researchers. We need more R&D and experimentation. I think the work that the MIT DCI is doing around just hardcore security research is so important, and it deserves to be funded. And we're seeing some great open source contributions, companies that are supporting that research. I think that's critical. The second thing is that unlike the internet, we're talking about moving assets around. And so it follows that if we're going to have these things, which I think we're going to have around fractional ownership and creation of new assets that move on blockchains, these will need to fall into regulatory designations. And we happen to have a lot of asset managers in Boston. We have a lot of custodian banks. So I think that we have the infrastructure to really bridge that gap around the vision of the new types of things that we want to build and how exactly you can get those things built from a legal regulatory perspective. And the third point is really just around some of the government interactions. I think the Federal Reserve of Boston has been really at the bleeding edge of some of this. And so we have some really good components here to really accelerate startups and incumbents. I'd love to see more incumbents jump into this as well.
Yeah, I'll jump on Matt's comment because it lends itself to what I was going to suggest. I'll be very pointed, Eric. I think this is a matter that, as we've talked about, we have to overcome regulatory hurdles. And so it's time to invite the regulators in to the room. And there's no better place to do that than our Federal Reserve banking system. I think if you look at the struggles they've had in their Main Street lending program most recently to get money in the hands of small businesses who are arguably the engine of growth for the world economy, we know that we need to improve the way that money and assets flow. And to have a regulator by the side who we could resolve the issues of perhaps even having a regulatory node that sits alongside of the creation of a blockchain that goes, if you will, you can envision it across the country in some physical manifestation. Let Mayor Daley, who heads the San Francisco Fed, meet up with Eric here in Boston and create a national sandbox where there's room for experimentation, there's intelligent regulatory overview, and Matt, to your point, you invite the institutions in. I think if we don't try to figure out how to do it together, we'll be long in the tooth in getting a solution out there. And time is I would say there's urgency at this point. Time is of the essence for us to figure this out.
I think you both said it very well, and I 100% agree. I would say what's unique about Boston is the points both Matt and Sarah raised is we have all of these ingredients here. We need to collaborate. If we don't have collaboration from the right component parts, yes, we could point to regulators. Things are being built, but they can't be used because they don't have the blessing for them to be used, right? So it is a critical component. And we may have to do it virtually for a little while here. But the beautiful part about Boston is all of these ingredients are within a pretty small area. We should come together, whether it be in a sandbox or, DBA is doing a wonderful job of advancing this conversation as well, Eric.
Yeah, and Eric, you don't have to do it by yourself, right? The BBA can be an organizing party, but there's such great analogs globally. I mean, look what the Monetary Authority of Singapore has done with their sandbox, if you will. I know it's a different operating environment, but you've had such major collaboration. The state of Wyoming has passed its own regulatory FinTech sandbox with an emphasis on blockchain and crypto. The Commonwealth is remiss if it doesn't figure out its policy position here and help the innovators and the investors move us forward. So I think there's a real call to action that needs to happen.
Okay.
I'll probably not make any friends by saying that, by the way.
Well, when you just look at what's happening now, there's press about, or there are discussions around, securing critical supplies, and digital, blockchain is ideally suited to that. There's another discussion about, and this might be a bigger stretch, and I know people have very strong views about it, but raising funds, at a state level, using some of this technology. So it can be national, it can be local. It just, I always think about what's the need, where can the need be tapped into, so the real concrete example again gets traction, and there's adoption, and that has happened with other technologies. I just wonder if the this can happen faster or slower than some of the other adoption. I mean, yeah, getting the people together is part of it, and maybe education is another. So I wonder if what do we do about education? Is it meetups? Is it going out and talking to students? Probably not, but is it campaigning with stakeholders like the institutions and regulatory bodies? there's been a considerable amount of discussion at a regulatory level and a couple of different, points of view, which, pinning those down, maybe now we have something that's a real need. Any thoughts? I mean, is there a catalyst now, given the environment we're in? Nobody wants to use cash. I mean, who's been out and used cash? And the only cash I've used, I went and picked up some pizza and I wanted to give them a tip and I'd already paid for it. So they were happy to have some cash in the bucket, What do we do? What's next? Is that it?
No better time than now. I mean, our lives have changed, and technologies are advancing, and the adoption of them faster than ever because of this environment. I think now's the time to hone in on, how we do things in a touchless manner, how we do things more efficiently, how do we rebuild, that ledger environment to create efficiencies and drive toward that single source of truth. Not to call it, use that blockchain analogy or tagline, but that's what the technology has the potential to do, is to kind of create that truth across the decentralized environment. No better time than now.
Yeah. So, yeah, please go ahead.
Well, I don't want to sort of put my two fellow guys on the pedestal, but I think it's important that we acknowledge we have two experts here who are working on digital identity. And I think what we're entering into now are uncharted territory around the collection of digital footprints or data points or crumbs. Think about what's happening in contact tracing, and what it means to your privacy. It strikes me. I mean, we all believe financial services is going to be the engine of the recovery, and drive it forward. But we do have such strength in the Commonwealth beyond our ecosystems and our academics, our tight institutions and regulators. We also have a very large healthcare system here. And it strikes me that if we really wanted to understand and advance financial services in the way that it holds the promise, where we think about it in the broadest definition of FinTech, which is a hyper-personalized, very much on demand, anytime and anywhere you need financial services, you can access it, hence the no cash anymore. But you also have to think about your intersection with your health data. And is there a way for the Commonwealth to begin to advance its thinking with digital identity? The two of the most important decisions we're making as individuals, our health and our finances. And so I do question, is that, it's outside of our conversation today, but is that a place where we go and we say, this is the strength of the Commonwealth that's unique to us and nowhere else? If we lift it up together, can we advance our thinking and both industries benefit?
Yeah.
And we're in the middle of a pandemic where our health and well-being, somebody's going to ask you guys for your, how well you're sleeping tonight eventually, because they're going to try to predict if you have the disease.
Yeah. Matt or Nate, the digital identity thing is really fascinating because, I think you've heard me talk about coming from being very involved in technology and wealth management and privacy, and so much changed in Europe with cross-border processing and banking secrecy. When I think of digital identity, I have this vision of the banks, the financial institutions, the healthcare providers. Each of us has a digital identity that's accepted, just like a SWIFT code is accepted, and we're recognized. That means you can shop for what you want at JP Morgan, you can shop for what you want at Amazon, you can shop for what you want, at Brickfire Pizza, or any other place, and it's the same common recognition. So could we be heading in that direction? I mean, do you guys see that potential, whether it's with the startups or whether what you're doing at Manetu?
Sorry, Matt, looked like you might have had a thought there. So
I was going to just jump in and say, I really like the way that Sarah framed the last point, and Eric, that you just built on around identity, because I think it's really important that when you do have an ask, that it's specific. I think there's, this is such an exciting industry, and there's sometimes a temptation to just have blockchain be the proposal, and that's just too big of a term. So I think that people coalesce around specific things that they're trying to build, that there are obstacles in the way. And so at the earliest stages, this was people wanted to buy Bitcoin, and it was really hard to do it. And so we started to see regulatory bodies come around to that. And Caitlin Long has done a great job in Wyoming to to push some of that legislation out there. In a similar way, you can see that around healthcare and medical records. I 100% agree with that. I think a third area that is really going to become a lot more important is just ownership of data in the context of Web 2.0 data monopolies. And so our social graphs, should we actually own them? So think about that in the context of Facebook. If you wanted to go to another service but port over your list of friends and your connections, you don't own that. You don't own your identity on any of these platforms. And so they can deplatform you, or they can go out of business. So would there be a world where we can each own our own identity, own our social graphs, and be able to port them from service to service and to provision data to service providers as we see fit, and to see how our data is being monetized? To me, that's a rallying cry that people can get behind, because there's some real monopolistic characteristics of some of the incumbents there, and some of these startups are really tilting directly at them. And it's a really, it's a freedom technology, really. You're giving people the ability to own not only their own money, but own their own data, and prevent people from doing manipulative things with it. So to me, it's finding those distinct rallying cries and distinct asks, and then trying to shape the world, based on what you need removed in terms of obstacles.
Yeah, that's really interesting when you talk about, removing obstacles and distinct asks. I keep the thing that keeps coming back is use cases, whether they're large or small, really clear, and that's what people can get their head around typically.
Mm-hmm. Yeah, I think that's right.
Any other thoughts on digital identity and the Rails?
There's so many use cases you could build from that, and I think some great ones have been thrown out. Just thinking about the government angle here, which is another use case and a critical player that we need around the table. Come election season, I don't know if I want to stand in line to cast my ballot. I'd like to do it digitally. There's another use case that potentially we collaborate with, the Commonwealth on.
Yeah. So if that's the environment we have to deal with, and we know, so we've confirmed there are opportunities, right? There's, nobody has said this is far-fetched and there's no need. Quite the opposite. It's a massive opportunity, and we've talked about barriers or obstacles. If I think of the startup community, I think of folks who, or early stage, really just, they need to make ends meet. They need to prove their case. They need to fund it. They need to convince people. And if I think of a sandbox, I think of providing a structure, a mechanism, an environment, maybe even a physical environment, and sponsorship to make that workable. And so can each of you, maybe this is it's not a yes, no, but it's pretty specific. If tomorrow, a team of us were to go out and say, we're going to build a sandbox because there's so much need. What are we, who are we going to convince? And what are we going to bring the startup community? Because the institutions, the regulators, and the startups, we've got to really get them all bought in. The need's there. So what are the 2 or 3 obstacles, and then how do we address them? How do we remove those barriers? And
I can start with what we learned from the FinTech Sandbox in Boston. It's not a perfect analog, Eric, to what I believe a blockchain sandbox would look like, but perhaps one of the key learnings we had when we started it in 2014 was access to data is hard. And it was hard for a number of reasons. There were frictions in the procurement process. There were frictions in the actual ingestion process, knowing who to go to. And so I think one of the components of a blockchain sandbox actually works to remove some of those frictions in the actual use of the protocols and the technologies. And you begin to look for where there are natural and accretive partnerships for the startups that help them advance their ideas beyond the characters we've just talked about, which are the institutions or the regulators. I think that foundational view or foundational support is critical for young innovators coming in and trying to build something.
Yeah, I mean, building on that, it goes back to that collaboration that I think is so critical for a new company. And I've heard this from a lot of people who have tried to advance startups. You go in with an idea, and you got to be ready to pivot, and you pivot based on learnings and reactions and responses from the marketplace. I really think of a sandbox as an accelerator, and sometimes they are referred to as accelerators. But let's create a collaborative environment where an innovator might be developing a solution using blockchain technology, but how are they getting that real world feedback from organizations and institutions who have real world problems? And how do we better understand those problems to ensure that we're advancing that new technology, that new capability in a way that actually adds value into the marketplace, right? Insert government representation in that equation, insert academia. I mean, once you get success, once you start having traction, once you've built something of value, how do you scale it? There's a financial component to scaling, in which case we call Matt, but there's also a talent component to scaling, right? Which is, how do we get people with these capabilities to be able to build on the platform from the academic institutions? They're learning about blockchain. They're learning how to use this technology. And how do we find each other? I mean, that's the type of, I think, real magical environment that a sandbox creates.
Yeah, that's a great point, Nate. I mean, if I think about some of the needs that our early stage companies are having, it's definitely on the technical side. So people with strong technical competencies in this industry stand to do really, really well. The other thing is just on the legal and regulatory side. So an early stage startup that was building a social network would never have to hire a general counsel as one of their first hires, but you might in blockchains. I mean, at least you're going to need someone around the table that knows what they're doing. And luckily, we've had some companies in Boston that have kind of shown us the path, specifically Circle. So, the amount of times that I've brought in John Betcha, who's formerly the general counsel of Circle and now runs his own consultancy, FS Vector. I mean, people like that are just so critical to this whole industry, because if you're starting a company, you might not know, or is what you're trying to do, are we talking about $10 million to go state by state? Or are we talking about, $1 million? There's just the scope and the magnitude of what you're trying to figure out there is really complicated. It's changing really fast. So states are doing new things every couple of weeks. So I think that's really important. And there are people like John who are really willing to help early stage companies. There are a lot of those type of people up here in Boston, and so that's something that I'm constantly introducing people, in my network.
Well, I think when I listen to this, what I hear is there's a growing understanding and a common understanding of need. Those of us that are not even deep into this, but see a need for change and the opportunities for change. That's one thing. The second thing is you're giving examples of things that have been achieved in blockchain space, like regulatory changes, like Wyoming, near and dear to my heart. But bringing those together and then having something which is a catalyst to accelerate it really seems pretty key. And I think, I've taken, quite a few, notes from this, and it really is a very real and a very tangible subject. This is really something we want to achieve and we want to do and we want to implement in Boston. And, as I mentioned, we've been talking about what's the next step for this meetup group, the blockchain association, but the collective group. How do we contribute, to making that happen, getting the right people to participate in the discussions that will move the bar somewhere. And then the other piece, which we haven't really addressed, I think it's really, and I think it's very important to be complementary and an add-on to the existing ecosystem. And so finding the right fit is also really important. So I guess, we're coming close to the tail end of it. We've got about 10 minutes. I noticed a question or a point raised about fractionalization. So I wonder if anybody wants to go a step further, fractionalizing assets further for, I think, spreading the opportunity to gain wealth or sustain assets is one thing. Any other thoughts on fractionalization? What examples there could be, or who it would benefit, or why we need it?
I mean, I can go first. I sit on the board of Rialto. It's a FINRA, just got FINRA approval. It's an ATS based in New York, taking traditional middle market debt instruments, raising it in the traditional, creating a traditional, if you will, bond that can be purchased. In this case, because they're middle market, they're largely private, high net worth and private assets. But on the other side of that, fractionalizing it in the digital economy. And that is, for me, the future of the way that we will fund, if I had to guess, we'll fund instruments that are underwriting ideas that are both for a financial return, but also doing some good. Because what you've got is a ready-made market on the other side. If you're floating, a $2 billion bond, you historically would sell those in lots of, $100 million. Well, very few institutions. Today, we can push it down with the fractionalization, push it down into a much more retail bond offering, size bond offering, and allow people who want to invest in something that they believe in the social impact, be it a biomass company, something that's doing renewable energy, maybe you're securitizing receivables off of a industry-led solar array, something like that. And so I think there's real promise, because we as individuals are no longer dissatisfied with a financial return. We also want to see our money driving towards outcomes that do good. And so I think making that accessible to the broader population through fractionalization, that you can, by the way, have some transparency in, and it's not costing you an arm and a leg on the other side, which is where the beauty of digitizing and blockchain comes in, is in the cost efficiency. Yeah. It's an outcome that's desirable and one that's on its way. I mean, we already see it at Rialto, the demand for the capability, and the regulators get it on that in that case.
Yeah. Well, the transformation that the transformation work I was part of in financial services, it was inevitable. There was always one driver amongst others: cost, margin, margin growth, sustaining margin, reducing cost. And that's a real natural driver that everybody wants to achieve. Maybe that's where one of the hooks to make some progress with getting more engagement and more investment into, the technology.
I might add, Eric, not to completely dwell on the cost efficiency, we are in a secular movement of the flow of assets into different asset classes, right? We don't have to look very far to see that flows are coming out of the public equity markets and into new and differentiated asset classes. And I would argue that if we make these things accessible to the new generation of wealth, right, this intergenerational transfer of wealth through digital means, that's what I mean, that we'll be able to kind of create this new form of financial mobility and investments. Yeah. We might solve some of society's problems in the meantime.
Definitely. No, I mean, the distribution of wealth is kind of critical to improve upon that, and using these fractionalization concepts to do it. And every time we live through a period where the stock market drops tremendously, I yearn for a place where I can buy unitized assets of other asset classes. And the ability to do that in the private space, far more difficult, right? You need a big sum of money to oftentimes invest in a private market. What home ownership is becoming harder and harder for people to access. What if somebody wants real estate exposure? This may not be the hottest asset these days, but what about a commercial building in downtown Boston? We couldn't even fathom having exposure into that space. But if you'd unitize an asset like that and make it accessible to the public, now you're creating a diversified portfolio, which is kind of core components of modern portfolio theory, and you're helping to distribute wealth more broadly.
Yeah, and Nate, I might add, creating liquidity on the other side, right? It's one thing to create these fractionalized assets. It's another thing too, which the blockchain easily could also be enabled. You can have off-exchange trading and liquidity. We see it already happening. So there's so many ways. It goes back to that core idea. You can't disentangle financial service, or we shouldn't. We should think of it as a big opportunity. But I'm sorry, Matt, I cut you off in my
No, I
excitement.
was just getting excited as you were talking because to me, it's absolutely inevitable that everything that you're saying is about to happen or is, already started to happen. But I think it's even bigger than that. I think we're talking about the creation of new assets that don't have current analogs. I mean, I think increasingly we're seeing people spend more time in sort of the metaverse, if you want to use that terminology, more time living digitally. And so we're already seeing adoption of fractional ownership of in-game video game assets, right? Like digital collectible card games, for instance, plots of land in the metaverse. I think will become a thing that increasingly people fractionally own and make money on. And so I think the design space here is really, really big. And there's a temptation to just look at, here's the size of this asset class now, and we'll have a liquidity unlock and it'll be even bigger, but it might be orders of magnitude bigger than what we're even talking about.
Yeah. Well, I think we're going to get either we can do a nice smooth close or we can keep going because there's a ton to talk about until we get cut off. But look, I think we've just got a few minutes left, and first, and I'll leave it open for any final comments, but a huge thank you for the three of you to take your time to join this panel and to share, all the experience you have and your points of view, with the group that's here tonight. There's something really interesting I picked up on, and it may not have been as explicit as some of these things around, rails and it's really the social change. Maybe there's another element which isn't financial, which is going to contribute to this, which is, the social change that's coming with the different generation. That could be part of the catalyst as well. Goes with the fractionalization, I guess. So any final really quick thoughts? Something really important you're thinking about that we may have missed?
I guess my final thought would be it's a really interesting time to be working in this industry because everyone is still trying to figure it out. And there are a lot of industries you'd have a hard time as a neophyte entering because there's someone with 30 years of experience sitting next to you, and it's hard to be on their level. But the space is moving so quickly, so I think regardless of your specialization or interest area, you can generally find a piece that you can carve out in this industry. So it's exciting.
Yeah. So I can see the time, which is we're about to get cut off, and I think that is a really positive, upbeat closing statement. So Matt, thank you for that. And Nate and Sarah, thank you again as well for joining this evening. Great discussion, super interesting. I've learned a lot. So yeah, really enjoyed it.
Thanks, everybody.
Thanks for having us.
Bye-bye.
Bye.
Bye, everyone.
Thanks, Eric.